Macy's, a top trending ticker here at Yahoo Finance. You've got shares sliding off just about 2%. After reporting, comp sales fell just over 4%, 4.2% decline in the fourth quarter from a year ago. Now, the retail giant also announcing that new initiative that Brooke was just talking about, including plans to close 150 locations through 2026. For more on these results, let's bring in David Swartz. He is Morningstar's equity analyst joining us now. David, it's good to have you here. So the new CEO, Tony Spring, really trying to engineer this comeback, as our reporter Brooke DePalma put it just a few moments ago, describing 2024 as a year of transition, as a year of investment. I'm curious to get your thoughts on his plan here and whether or not it's really going to move the needle when it comes to stabilizing profitability.
It's hard to have a lot of confidence in it because this is not Macy's first turnaround plan at all. Macy's has been closing underperforming stores for years, and it certainly begs the question, if Macy's has closed all these underperforming stores, then why haven't its results improved? A lot of analysts, including myself, have long argued that Macy's needed to close more stores. So really, this plan is overdue. It's really long overdue. Macy's has a lot of stores and malls that are not viable in the long term, and this has been apparent for years. I would have to say that this is a really disappointing way to start out a new job as CEO at Macy's, having to close 150 stores and lay off a lot of people. That doesn't exactly generate a lot of excitement among investors or employees, I would imagine. And so at this point, it's hard to have a lot of confidence at all in Macy's turnaround plan.
And so, David, with that in mind, I mean, department stores have been struggling. Macy's is no different than any of the others in this kind of basket of players within the space. And looking across their portfolio, like you were mentioning, having to close stores, almost kind of tapping into some of the early elements of the Sears playbook. How do they avoid the demise that a Sears had to go through?
Macy's is still different than Sears. Sears had problems because it was primarily a hardware type of store. That's what Sears was known for. And Sears sold different stuff than Macy's sells. And so I do think there's a place for Macy's in the future. And in fact, I think the stock is undervalued. My fair value estimate is $25. And there's a reason why that investment group led by Ark House is interested in buying Macy's. Macy's does have very strong e-commerce. It does $7-8 billion a year in online sales. It has 40 million active customers, has millions of credit card holders. So Macy's does have strengths. The problem is that Macy's is operating a business model that doesn't work anymore and hasn't worked for years because the market no longer needs these 180,000 square foot department stores that Macy's operates. And so there's really been a transition that's been going on for probably 15 plus years, and it's really not even close to ending.
David, when it comes to some of the other plans that we heard here from Spring and what they plan to do over the coming years, yes, they're closing down 150 of the namesake stores, but they're also looking to expand Bloomingdale's and also Bluemercury. It looks like a bet here on the higher end consumer. Is that a winning strategy from your viewpoint?
I'm not sure that it is, really. If Macy's is going to go more into luxury, they're going to be more competitive with stores like Nordstrom. And really, Nordstrom itself is not doing that well. There's really not much demand anymore for department stores for luxury goods because a lot of luxury products now are sold directly to the consumer by the brands themselves. Nordstrom has closed over 15 stores in the last few years, and so it's downsizing. Bloomingdale's only has fewer than 40 stores in the U.S., excluding the outlets. Now, it was clear, though, from the earnings call that most of the new Bloomingdale stores are going to be either Bloomies, which is a small-scale Bloomingdale store, or outlet stores. So they aren't really opening up new Bloomingdale stores. They're opening up smaller-scale stores. But in that category, they're way behind Nordstrom Rack, which already has 260 stores nationwide. So it's really going to be a long road to actually get that to be relevant.
You mentioned, David, at the top of this discussion, your price target and your fair value estimate of $25 for Macy's. For a lot of people out there who are hearing the buy the dip mentality start to emerge within the broader market run-up that we had seen, is Macy's a company that's missed out on much of that run-up? Are they worth buying this dip?
You can make an argument that Macy's real estate is worth more than the market cap of the company. I mean, so there is an argument to be made that Macy's has hidden assets that are actually valuable. And this is why there's interest in buying Macy's again. There have been activists looking at buying Macy's now for years, and it's because Macy's has significant real estate, and they have a large online operation. Some of the other strengths that I talked about. There has to be some concern, though, that the company just keeps getting smaller. The revenues go lower every year. Closing 150 stores runs the risk of losing customers that may never come back. So it's unclear that there's really any growth plan at Macy's at all, but there is real value at Macy's. It is still the largest U.S. department store. There are still major brands that rely on Macy's, like, for example, Ralph Lauren and Tommy Hilfiger and Calvin Klein. There are brands like that still invest in Macy's and still want Macy's to succeed. And I do think that there's a future for Macy's. It's going to be a smaller company, but I do think that is more than reflected in the current valuation.
All right, David Swartz, always great to get your insight. Thanks so much for hopping on and reacting to Macy's earnings report out this morning. Again, shares under pressure in the pre-market. Thanks, David.